folks, Scott here, and this is the wrap for Friday, May 24th. So this is a 5-minute chart here. We sold off a little bit after the open. I think he would have survived with the MTG stops. I'll get to that in a moment, but right at it was about 5 or 6 point move. And now we're rallying and hopefully go push towards gap fill. I'll explain that in a moment. But the market's still live. It's Friday afternoon, right after lunch, and getting ready to call it a day here shortly. So I'm doing this before the day is done. But I'm anticipating, and that's the key here, anticipating that we're going to close below the prior highs and actually trade, but never break yesterday's highs, nor will we break yesterday's lows. So that would be by definition an inside day. And an inside day below a 10-day moving average and above a 200 will show up in our worksheet for members next week. But for those of you that are not members, just to tease you a little bit, I thought it's an interesting pattern to know and an easy one to recognize. So I thought I'd share you the results for this unique pattern. An inside day, specifically when below the 10-day moving average. So I am assuming we're going to close below the 10-day moving average and when above the 200. And there you go, 50-50 in terms of which way we're likely to gap on the subsequent day. Gap down is pretty much dead neutral. 70% is the average, but that's right at it on a decent sample size. Gap up appears to have some above average risk in terms of win rate and profitability. Now this is using an end of the day stop, not something I use, but a good place to start your analysis. And what this does tell us is it's been a big money loser with an end of day stop, meaning when it hasn't filled, you've had big runners, almost 10 points. See that number, divide by 10, and we'll divide by 500 to equate to 10 contracts at $50 a point. Tells you the average move was almost 10 points. So could get a trend day to the upside following this pattern. You always want to be open to that and keep that in mind for like a high breakout if you get an opportunity. So looks like to have a little bit more risk to the short side come next week. Markets are closed on Monday for Memorial Day holiday, so don't forget that. All right, today's worksheet and guides, let me show you. I did not trade today. It was a pretty easy one to pass on, and here's why. You see the average worksheet averages all 8 gap guides opening between the prior close and prior low has been just a neutral setup. 56% win rate, 0.9 profit factor. Profit factor's ratio of profits to losses. Anything less than 1's a money loser. Anything greater than 1 has been a money maker. I'm looking for a minimum of 60 and 1.3 here. Had we gapped up, we could have had that. We would have had that scenario, but that did not happen. No unique day factors that I'm worried about. Several patterns. I discounted this unfilled gap, down gap, because most of the markets did fill their gaps yesterday. However, let's see. After a false update, though the sample size is small, this tends to hold up well in most market conditions. Fading down gaps after a false update, that's a green candlestick that closed lower, has been problematic historically. Tend to suck in longs the prior day, and then they have their stops run the next morning, and that's probably what happened today. And let's see, neutral and everything else. So here are my pre-market comments. For last night's wrap, that was a risk factor. Down gaps on Fridays when below the 10 and 200-day moving average. Yucky. Medium and large down gaps. Normally I just talk about large down gaps, but I wanted to increase the sample size, so expanded it to greater than 30% of the 5-day ATR, meaning opening below 1644, which it did today. On Fridays above a 200, also, well, not as bad, but more neutral, even though it has made a little bit of money. But if following a 200-day high, closed during the past 5 sessions, 50-50 and a money loser. So the recent bullishness couldn't count on that necessarily. And then this other one was interesting as well. Large down gaps greater than 40% in May when less than 10 above a 200. Similar to yesterday's data, which was what, 3 of 19 or 3 of 17 prior to the trade that actually ended up working. This was 5 of 16. So enough risk factors with neutral guides for me just to leave it all alone. And I said I will wait for the range guys to look for opportunities to get long, or because of this bullishness, and because I know that large gaps, we talked about this in the trading room, actually showed some data. Large down gaps, while they're tough for trading at the open, once the initial selling on a Friday specifically, once the initial selling is done, often you can catch a bid. And I'm actually long right now. I'll show that to you in just a moment. Don't forget to have a safe Memorial Day. Cool video there if you want to check it out. And don't forget, freedom is not free, never has been, and never will be. Actually, let me show you. 15-minute guides did not show much, but let me show you the first hour guides. And they weren't overly compelling, by the way, at all, but they generally favored the long side, and we're in a bullish market. And I knew that big down gaps on Fridays tend to finish positive about 70% of the time. So this leaned in the direction of the high breakout, but clearly didn't meet my criteria. YM clearly did meet my criteria. NASDAQ met my criteria, and the Russell leaned that way, meaning it didn't quite meet my criteria on profit factor, but clearly there was a delta here that favored the long side. And then the ETFs, Spider more neutral, Diamonds clearly favored, clearly leaned towards the high breakout in the Qs, and the Russell was more neutral. So again, not overly positive, but looking at all the data we looked at this morning, the trading room was pretty clear. It was worth trading. Told people I would take it if it triggered. And it did, and right now I'm riding it to the long side, being a little bit greedy. It's already gone 3/4 the way to my target, so I've tightened my stop because I'm actually leaving here shortly and will be out the rest of the afternoon. I'm looking for gap fill or near gap fill. I'm looking for +6 on this. Right now I'm only risking about 2 points. I'm not risking any. I've locked in a profit already. I've tightened my stop to just see where I'm at, 42.75. But I'm leaving here in 30 minutes. I'm going to have to close it out, so I don't have to worry about it the rest of the afternoon, and hopefully I'll end up with a little bit of a profit. Looks like that we will. So there you go. That was my day, and we'll see you next week. Have an awesome Memorial Day weekend. Be safe.